Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is December 11th, 2013, and today I will go over two pairs quickly, and that's the Kiwi and the Aussie dollar. And I'll also just touch on the Aussie Kiwi briefly. Now let's just start out with the Kiwi dollar, currently on the 15-minute charts, and with this pair, covered it on the chart of the day for yesterday, the 10th, and we saw that we have a head and shoulder formation brewing. Now we see the left shoulder, right shoulder indicated by the blue circles, and we see that prices are capped by this ascending trend line. We also saw that it broke above the neckline and is finding current support at that level. We also saw this descending trend line, which it also seemed to break above, and it's also finding resistance around that level. So right here is a good area for you to look to get long and take advantage of the rest of this, what we have pegged as wave 3. Definitely anticipating prices to push higher from this point, so we should see about a 200 pip rally from this point, and prices should push towards that 84.4, 84.3 level. Other pair I wanted to look at was the Aussie dollar. Now Aussie dollar, somewhat similar picture to the Kiwi. Now it appears we're gonna get a bounce off this ascending trend line. We do have the formation ending, the corrective phase ending, as we have this labeled A, B, C. Waves A and C are actually have a 1 to 1.618 times relationship with each other. So we saw that prices terminated at that 1.618 level, and then it reversed from there. So now we saw that it had a resistance in the form of this descending trend line, which it broke above and is currently finding support at, but we could see prices push a bit lower. Also covered this chart, covered this under the technical analysis area, and I did say look for longs at 0.906, as that would be a test of the trend line. Well, you can definitely look to do like half a position here and the remainder much lower, or you can just wait for that whole thing at that 0.906 level and then look to get long there. And also keep note, if we do see prices push towards that 0.906, maybe even a bit lower to 0.905, and then reverse from there, then that would also set up as a head and shoulder formation, as this would be the left shoulder and then that would be the right. So if we do see prices go that low and then take off, and then at that point it would need to break above, this trend line, as then that would be the neckline. And then once it breaks above that, and then that also would break above this other descending trend line. So once it breaks above that, about 91.8, then that would just confirm that move even more, and prices should then take off from that point. Now we do have this labeled as a wave 3. As you see, we have 1, 2, 3, 4, 5 to this a larger wave 1 and then a larger wave 2. So we do have this as the wave 3. So if prices do break, if it do come down to that 0.906, 905 level to make that head and shoulder formation and then break that neckline and push higher, we could see this move significantly higher. So we could see new highs in this pair. So we'll definitely monitor this to keep track and see we can take advantage of anything in the weeks to come. And lastly, I just want to take a brief look at the Aussie Kiwi. Now let me just jump over to the daily charts real quick. And with the Aussie Kiwi, we have been tracking this for some time, and we're trying to predict the end of this wave 3, as we think we could take advantage of the wave 4. And though it's not good to really trade wave 4s, but we definitely think we could take advantage of this one, which is why we will try to see if we can do it. But as we see, prices have found support at this ascending trend line, and this is where we have our wave 3 ending. So now with that said, so we jump down on the 15-minute charts. Before we tried to catch that price, we caught it somewhere here. We called it out somewhere here last week, did a chart on this, but then we saw prices did break back below. So what we will do is wait for a break of this descending trend line, and that would be the confirmation that this pair is going to push higher, significantly higher. And we could see this pushing as high as 119. Let's give us that correction. So as high as 119, and then that would correlate with a bounce off this descending trend line. So we could see prices push as high as 119. So we can wait for a break and a retest, and that would be about 111. We look to enter along there, and then we can look to run it up for 800 pips. So that's the video for today. Thanks for watching. Any questions or comments, feel free to jump in the chat room. Paul or myself will gladly assist you with anything that may come up. Shoot us an email. We'll readily respond and answer any questions or comments that you guys may have. Once again, thanks for watching today's video, and for those trading, enjoy the rest of your week trading, and good luck.